Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses. Make sure everybody's up and running okay. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like everybody's up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. There's risk with each and every trade that you take. The flip side of that is obviously there's nice potential for profit with each and every trade you take as well. If you're smart about your risk management and your entry points and exit points and your technical analysis, along with some fundamental analysis would make sense. Hopefully you can come out on the positive side more often than the negative side. And at least that's the objective here. Keep in mind that what we go over is from an educational perspective and is not to be taken as financial advisement. Real quick, what is technical analysis before we get on the live charts and look for some actual live trade opportunities? Technical analysis basically is looking back at the candlestick charts, at the price levels, the patterns, and looking for something that might look predictable moving forward based on the historical movements and price levels. And a lot of times patterns do repeat themselves. Price levels and ranging movements, support levels, resistance levels, etc., trend lines. A lot of times these sorts of techniques with your technical analysis can improve upon your win percentage and your P&L. At the end of the day, the end of the week, etc. So that's the objective here, is to find some strategies, some concepts that will help you as you move forward, hopefully to improve upon your win percentage and profitability. Obviously, with no guarantees, it's in the end up to each individual trader how well they apply different concepts and ideas. Now, we can make use of indicators. In the webinars, we tend to use manual methods of technical analysis because this forces you to understand the price levels and the strategies that are being utilized rather than relying on an indicator to say, hey, buy now, or hey, sell now, with different signals that the indicators are giving, usually in a visual type of form, whether it's Bollinger Bands or RSI, etc. Usually there's an image that, you know, at some point it's telling you, hey, now you should sell or now you should buy. It's nice to have those as a backup to see if they agree with your manual methods, and then kind of have a checklist of ideas about when you'll buy or when you'll sell. Now, as we move forward, please feel free to ask questions, to give input. I'm happy to address any questions that are raised or to answer any questions that are given as well. Now, as we look here at the screen, this is our web trader platform, and we'll also go over that you see in the bottom right of the screen. I'll expand upon the AvaTrade Go mobile app as well. Both have very nice risk management features and technical analysis tools built in, fundamental analysis tools built in that will help you out with your technical analysis strategies. And we'll go over how that can function on some live charts here in a moment. Real quick, I like to look at the headlines to get an idea before we get into a trading strategy, get an idea of which way is the wind blowing. Even if it's a technical analysis strategy that we're using, it's nice to get an idea for the sentiment for the day from the fundamental news situation. And so we see positive sentiment today in the headlines. U.S. retail sales accelerate in strong boost to economy. That triggered the markets to be green all day. We see that here in this snapshot down here, showing the U.S. indices all in the green. And also we see the volatility index is down, so fear or volatility is down. Markets are all green, and the US dollar is strengthening, okay? And that's a sign of positive momentum on the markets when the US dollar strengthens and still the markets can rise against the US dollar. So it's an interesting situation, and you might expect with the US dollar strengthening like it is today on the dollar index that commodities like gold and silver and oil might be pulled down against a strengthening US dollar. But, you know, especially a commodity like oil, when there's such positivity in the economy, if oil is dropping, that might be an opportunistic spot to try and buy on crude oil, fundamentally speaking, because if there's positive momentum in the economy, usually that increases demand for oil. And so you would think if oil dropped, wow, if you catch it at a low point, maybe that's an opportunistic spot with your technical analysis to say, hey, I'd like to buy on something like crude oil. Also, with the U.S. Passing more stimulus and that sort of thing, if you can catch gold at a low point, maybe you expect the US dollar to give back some ground to a commodity like gold if there's more stimulus being passed in the US, which recently it's gotten through the House of Representatives and maybe is going to be signed with more stimulus soon. So that's something to maybe anticipate fundamentally, that gold might have a reason to pop back up. Crude oil might have a reason to pop back up with positive acceleration on the economy, okay, based on retail sales out of the US. Right now, oil price is mixed. We just talked about the fact maybe we'll see oil pulled down a bit. You know, there's tight inventories because there hasn't been enough production to keep up with the growing economic demand. But also there's demand worries because of COVID still spreading in some areas around the world. And also OPEC is, you know, going to up production eventually here. They've already agreed to some production increases, which could pull crude oil down, right? So there's a mix here, and oil's kind of just been bobbing around. There's still talk that there's expectation that crude oil could hit $100 a barrel. You know, Goldman Sachs and some others have talked about 95 a barrel, 100 a barrel. So, you know, with the economy showing strong signs of life, usually that's bullish impetus for crude oil. And so we'll have to take a look and see. Did crude oil dip more than it rose? Is there a nice support level we like on crude oil? Or is it up and we like the resistance? We'll take a look. We'll see what's going on. Kind of a mixed bag for crude oil, fundamentally speaking. Okay, so a couple a couple options for trading. One would be our web trader platform. The other would be AvaTrade Go, that I think can help you with both your technical analysis and your fundamental analysis. And so let's first take a look at the AvaTrade Go mobile app, and I'll just expand that on my screen. And we'll take a look and see how can your technical analysis be helped by using AvaTrade Go, and let's look for some actual opportunities right now as well. So one thing I would say is if you go down and you see these tabs down here in the lower right, the tab, I should say, the three little lines. If I tap on that, then I see some options, and you know, it can take you to educational videos. And as I scroll down, I see some basic things like the economic calendar, but also market buzz, Forex featured ideas, and analyst views. Those are advanced features that we provide on all live accounts and through the app on demo accounts as well, that you can take a look at from Trading Central, these advanced features that can help you with your fundamental analysis if we're talking about market buzz, or your technical analysis if we're talking about featured ideas and analyst views. And if I go ahead and tap on analyst views, it'll bring up free technical analysis signals coming in for both cryptocurrencies and your standard currency pairings. And so as we scroll down, we can see some cryptocurrency predictions. They're saying rebound movements. Why are they talking about rebound movements for Litecoin, for Ether, for Bitcoin, and they're saying up Well, because there was a big crash today. Cryptocurrencies dropped a ton with some scares because of U.S. policy in their new infrastructure package. They slipped in some language about anybody, any businesses dealing with cryptocurrency transactions. If it's $10,000 or higher in value, they have to report the client information to the IRS, something like that. And so that created a bit of a scare in the industry a little bit, and there was a drop off. But really, in the end, maybe folks realize that adds more legitimacy to cryptocurrencies then. If governments are saying, okay, we accept that this is here, now we want to tax it properly, that actually eventually could, I believe, lead to some more stability with cryptocurrencies. And there were actually some senators in the U.S., some congressmen that want to do some addendums to that language so that it's a bit more clear about, are we talking about cryptocurrency miners, those creating coins and mining coins? Are we talking about just the exchanges that would have to report this information to the IRS, et cetera? And I think some of that maybe calmed some nerves as well. That they're going to try to work out some of the ambiguity with some additional language put in to what was passed regarding or what's maybe nearly going to pass if the president signs it in the U.S. regarding cryptocurrencies and tax rules. So that's something to keep an eye on, but it looks like they're calling for across the board rebounds now on cryptocurrencies. And so you can just see that general trend even without looking at the individual cryptocurrencies. Then we see something like USD Canadian, USD Swiss franc, and they've been climbing through the day. The US dollar has been very, very bullish. We see calling for the pound maybe to gain back against the USD. Maybe that's something that's interesting to look at because the US dollar did so well today. And now we look at something like GBP USD and we see the signal, we see the support level drawn here. Okay, the price is right here at the bottom of this blue arrow, and they expect a bullish movement up with the pound against the USD as a rebound. Okay, and so that's something we could say, all right, so let's see what the chart looks like right now. The US dollar has been strong all day. We saw the US dollar index when we were looking at some of the fundamental news, and we see that the US dollar strengthened quite a bit. And now we see a signal that the pound might bounce back up against it. Okay, and it gives you the price levels here, the exit points potentially that you might get out. Everything's here. It gives you the preference, long positions above 134.05 with targets around 134.75 and 134.95. So certainly as you start to get near 1.35 in price, $1.35 on any long positions, you start to look like this signal has worn itself out then. Okay, so let's take a look. Is the pound anywhere near $1.35 yet, or is it lower than that? And it says alternative scenarios. If it's dropped below 134, then we're looking for further dropping to 133.50. Okay, so it gives you the preferred movement, but also an alternative scenario in case the support level was broken. If the support level was broken, then all bets are off according to this signal. Then they're saying sell with take profits down at the support levels down here. Okay, so then we take a look at the chart and we say, what's happening then? Let's take a look and see what's happening on the chart for GBP USD. And so, if it's not in your favorites list, then you can easily search for the instrument that you're looking for. And so let's pull up GBP USD. And you might think, technical analysis isn't as easy from a mobile device as maybe it is from the full screen platform. And I tend to agree, but our app actually makes it pretty simple to do your technical analysis. And so what we're looking at here is certainly the pound did some dropping, and it did drop below that 134 4 mark, but it looks like it's trying to bounce back up a little bit right now in the 4-hour candles. And if we then go, that signal we looked at was on 30-minute candles. If you didn't notice, it showed you in the signal. And so let me pull up 30-minute candles or something close. Here's the 30-minute candles. And I'll just, by pinching the screen, scroll back a bit. And I can see that there is a bit of a support level down below. And let's go to something bigger, maybe 1-hour candles. And we see certainly the pound is starting to climb again. And the bullish signal said as long as you're not near 134.8 or 134.75, that this is still a buy signal. And we can see an uptrend beginning. And if you wanted to trade on that, then obviously you can jump in here, choose buy. If that's what you want to do, you can protect it with AvaProtect. Okay, so an option would be, and I told you that there are some nice risk management features in the app and on our platform. So I might say, you know what, the US dollar's been strong today, so it's a bit risky in my mind maybe to go with the pound. The signal says go with the pound, and it looks like it's bouncing from that support level, but maybe I'm going to protect this for, I don't know, a full day even, not just by the hour. Maybe I'll do 1 day's protection, and I'll go after a 0.1 10,000 pound value position and only have to pay 24.58 USD for protection for a full day. Okay, and my take profit, I can program at some place that makes sense based on the signal. And let me expand that again. And so if I want to put my take profit at, let's say, 1.348, okay, my potential profits more than what the risk is with the protection. So I only need to go to that spot, and I make more than what the protection costs. Now, maybe I decide I want to go all the way to 135 based on the chart. Maybe I feel that's a good idea. Now you see my profit potential is more than double, nearing triple what I pay for a full day's protection. And so maybe I decide that I even am willing to pay a little bit more, but that's the price point I want. So if I like that protection, then I set it, okay, with my take profit, and perhaps I come up and I decide that I want a larger lot size because the protection isn't costing me much. And maybe I want to go after a larger potential profit. So I come in here and I say, maybe I want 0.25. All right. Now my protection is only costing me $61.45. And my potential profit you see down here is over $156 or approximately $156. And so if I like that position, then I click buy. Confirm buy, I should say, at the bottom. And so I take my trade with protection on it. Very limited measured risk, which is something you can't necessarily do with any other platform, really, other than our web trader, to be able to put that type of protection on a position for such small cost after you do your technical analysis. And on top of that, we got free signals. The signal's telling us bullish up into a certain price. So hey, we're all hooked up with our technical analysis signal. We checked the chart. We looked at our support level. We even protected it with AvaProtect. Mohammed, good question. Ava Options is a different type of trading. That's options trading, and it's not exactly the same. Option strategies, you're just like we paid a premium for that protection. You know, with options trading, you pay a premium for every trade. It's automatically like that. So this AvaProtect is kind of using options trading ideas and concepts to help protect your trades. So if you know anything about options trading, you're always paying a premium or getting paid a premium if you're selling the option, which you can do that as well. You can buy options or sell options on our platform, but it always involves a premium cost. So you cap the risk if you're buying options, and your profit potential is unlimited. And the option runs for measured time periods, just like what we did with the protection. So that's a very good question. And it's actually very similar options trading to what you're seeing with AvaProtect. So you don't need an AvaProtect feature on our options platform, because that style of trading actually has that type of risk management built into it. Good question. David's asking, and I'm happy to address questions when they relate to exactly what we're looking at. So this is very good. These are good questions. I think it'll help everyone. You're asking, is there a stop loss required when you use AvaProtect? And during the protected time period, no, because you're protected. In the case of the trade I just took, I'm protected for a 1 day's protection until the exact time that the protection shows it ends tomorrow. It might be a little more than 24 hours, a little less. It gives you the exact time on the protection. And if I go to my trade, I can look and you see a clock counting down to how long I have left on the protection. As it gets near the end of the protection and the trade is still running, I might choose then, when the protection ends, to add a stop loss at that point so that I have another type of protection. So that's a very good question. And you can manually close a trade before the protection ends if you're in a profit you like and you want to close it, or for that matter, if it's at a loss that you say the movement's going the wrong way, but it's reaching a support level maybe, and you think it's going to go up now, you can manually close the trade, collect the payment on the negative floating from the protection, then reopen it with a stop loss. And at that point, anything that goes up, you're pretty much all profit once you make back the premium that you paid for the protection. So you can play the protection like that within your strategy, that at some point you could have a stop loss at the same time as the protection so that it closes, takes the payment from the protection if it's that far in the negative, and then you could have a pending order to reopen from the same price that your stop loss was. You take the payment from the protection, you have a new trade open with a standard stop loss, and now if you just go up a little bit, you're in overall profit on those two trades. Okay, so you could have a combination of a protected trade with a stop loss and a pending order to reopen a position at the same price if you close the protected trade before the protection ends with a stop loss. So there are different strategies you can do like that, and it can work very, very well if you just think through the steps. Very good question about the stop loss with the AvaProtect. Okay, so we can look at some other signals, or we can go on and look maybe at the web trader. We'll look at one more signal on the app, and then we'll move to the web trader maybe and look at it on full screen, because I do kind of like the full screen a little bit better for doing my technical analysis. I think probably most people, but it's good to see that I can fully function, that you can fully function if you're on the go, you're at work, pulled over on the side of the road, I don't know, at a rest stop or something, and you want to take a look at your trades. You can see you can fully function with strategies, technical analysis, fundamental, right here from the app as well. So let me go to analyst views again. Let's take a look and see what the analysts think about some other potential trades. Now, the AvaProtect is only available on FX pairings, gold and silver. Okay, so if you're trading on the crypto, you're not going to see AvaProtect. So probably you're going to use a standard stop loss as a way maybe to protect against losses for anything more than you would want to potentially risk. Now we see USD Canadian. This is an interesting one because the US dollar has strengthened so much. Oil has been down a bit. And so we see US dollar was predicted to climb. It has been climbing. And if we look at USD Canadian a little closer, maybe we get a feel for what to do next. And we see the price levels here. Long positions, it says above 124.90 with targets at 125.65. You know, if it hasn't reached 125.65, nearing 126, then maybe you're still looking to go with the USD. If it's reached that height, you might be looking for a rebound with, if oil strengthens back up, for the Canadian dollar to pull the USD back down. Okay, the Canadian tends to strengthen because their economy is so reliant on oil. The Canadian tends to strengthen if oil goes back up. And so with inflation concerns still there out of the US, with all the stimulus, there's reason why the USD could weaken back down against the Canadian, especially if oil goes back up, with the supply concerns going on with crude oil. Then that could be a spot where, if it did already go up and you missed that signal, and the USD already climbed near 120, $1.26, then maybe you're looking to go the opposite direction from this resistance, because even the signal's telling you that's the upper resistance up there. So maybe let's minimize this, and we'll go to if I can minimize my view here. There we go. We'll go to the web trader to have a full screen view on it. And so, by the way, to get to the web trader, you log in from here, and then here you are. And the web trader has all of the same features that you would see in, or that we saw in the AvaTrade Go app. Andreas, good question. You say, does a Canadian go up when crude oil goes up? It's not 100% one-to-one, 100% for sure correlation, but the Canadian dollar tends to strengthen when crude oil goes up. Correct. Now, if Canadian's listed second in the pairing, right, USD Canadian, then the Canadian strengthening would mean that that pairing would actually go down. So be careful always saying up, but yeah, I get what you're saying. Up meaning Canadian strengthening as crude oil goes up. That tends to be a relationship that we see a lot of times. And so, but if it's Canadian JPY, then yeah, Canadian up, right? But be careful pairing the Canadian against the yen, because the yen strengthens when there's fear. And if oil is going up because of, let's say, fear of war in the Middle East or something that would disrupt oil supply, and if that's the reason crude oil is going up, then if you have the Canadian paired against the yen, you might actually see the Canadian have trouble rising against a safe haven currency like the yen. However, if crude oil goes up because of something positive, because of a roaring economy, then the yen tends to weaken with good news, and the Canadian and oil tends to go up with that type of good news. And so then you would expect the Canadian to rise easily against a weakening yen with economic optimism, if that's the reason why oil and the Canadian dollar are going up. So you have to look at the reason why is oil going up, and that helps you determine, should I pair the Canadian against a safe haven currency like the yen, or maybe against a different currency like the USD. Okay, so not all oil increases in price are because of good economic news. Sometimes it's because of supply chain fears or disruption of shipping lanes because of war or whatever. If that's why oil goes up, we see a different reaction against the yen and against the USD than we'd see if it's because of economic optimism that oil goes up. So you have to analyze the fundamentals behind things and then take a look at the technicals. Very good question. So let's look at the USD Canadian on the full screen here, because we saw the signal saying the USD was supposed to rise against the Canadian. So let's look at that. We'll pull it up real quick. And so let me expand the chart. We'll get rid of the order window for now. And let's go full screen and take a look at USD Canadian. And so we see an uptrend on the 15-minute candles. So that signal, boy, was that right. If you looked at that signal a few hours ago when it first came in, you're way in the money. Okay, if you traded off that signal, the movement went right up to where it said, right? 125.6 approaching 1.26. Okay, it went right up to where the signal predicted. So it's nice to see confirmation that that signal worked out well. let's go to bigger candles, and we start to see, okay, is there a resistance level up here somewhere? And remember I said 126 might be the end of that signal. That's where it drew the exit point. The first exit point was at 125.6, which is where it's having a little trouble now. And why was the first exit point on that signal here? Because this was an old support level. We see the candles here. This was resistance and then became support, support, support. And once that broke through, this should be resistance now. And so the first exit point on that signal was right here. And look how accurately it predicted that that's where it would run into some problems with further climbing. And you see the resistance kicking in, and the red candle came next. It doesn't mean it won't break through and go to the next level, but that's the upper resistance up here that the signal talked about as the upper potential take profit up at this price up here. So boy, that was a very good signal. We see it went rushing up from the support level that they drew. Remember, it said the downside is if it broke below, then maybe it would drop further. That never happened. Okay, now we're looking and we're saying, all right, that big bull run up with the USD strengthening looks like it kind of fizzled out. Maybe with the inflation worries and the stimulus passing in the US, maybe the US dollar weakens back, potentially. And if that's how you feel, and you say, hey, the resistance level held here, then the technical analysis would say, maybe I sell on this, and I put my stop loss above the second resistance level up here. That way I have 1, 2 resistance levels in my favor before it would hit my stop loss. And my take profit is larger without having to break any support levels down here. Okay, so I can go in, let's minimize this. Let's click on the buy option, or I'm sorry, the sell option then, according to the technical analysis, to sell and do a market sell. You could use AvaProtect if you want. You can protect this position. And since we did AvaProtect on the last one, let's not use it this time. Let's do a stop loss and a take profit. So stop loss above that 126 mark, right? That's where that next resistance level was. So let's say 126.05 for the stop loss. And then my take profit, let's go, and I'm sorry, I have a little bit of a cold. If you hear me sniffling, I apologize. Let's go a certain number of pips maybe below the current price. So if it's at 125.54, let's go 125 even. Nice round number. We don't have to break that spot. And let me move my phone app out of the way so we can see everything. So we see my potential profit is a little bit larger than my risk. Okay, and maybe you're expecting a larger drop than what we're looking at here, or maybe you say, you know what, I only need my stop loss to be above the 1 resistance level. And if that's the case, then you say, okay, I only need to go above 125.60. That was that first resistance level. So let's go 125.75. A good distance above the first resistance, but not going above that second upper resistance, because the first one held, and maybe you're saying, I want to go after a larger trade here and only risk a small amount still. So I'm getting beyond that first resistance level here by a nice distance, and now I have triple the potential profit as long as that 1 resistance level holds. And to get to my take profit, I don't have to break any support levels. So according to what we looked at on the chart. So now I'm saying I can even cheat my take profit up just a little bit above 125. Let's say 125.05. And I still have better than 2-to-1 potential profit to risk. And now I can up my trade size even and not risk even as much as I was with the other stop loss setting. So I can go in here and say, let me do a quarter of a lot. And now I'm still only risking 41, but my potential profit's about 100. And maybe I decide, you know, I'm willing to risk 100 actually on the move. So now I can increase my trade size to 0.75, let's say. And I'm risking 1. You see how this is calculating my potential profit and loss, okay? Potential profit, potential loss. So it's very easy for me to risk manage. If I know I want to risk 100, let's say, so I keep changing the trade size until I get exactly to where I want. So there, I'm risking 101. close enough for me to 100, right? So now my potential profit's 260. I'm risking only about 100, and the technical analysis is on my side. Maybe the fundamentals are on my side too. And so now I'm ready to go ahead and say, let me sell on that. So you see how easy the risk management is when you use the web trader and AvaTrade Go. The order window is actually acting as a trade calculator. So you can see exactly how much you're risking, what your potential profit is for whatever prices you put in for take profit and stop loss. And all the while I'm using the free signals to understand where those important price levels were. As I'm doing my technical analysis, I already had a heads up that this was the upper resistance and this was the first resistance level and that this was the important support level. It was all outlined in that signal on USD Canadian that we looked at on the app. And by the way, those signals are here too. Click here, go to Trading Central, and there's your analyst views, Forex featured ideas, market buzz, etc. Okay, so very simple to have support for your technical analysis. Even if you like to do your own technical analysis, which we just did, we drew our own lines, and it just happens that the signal was right. The upward bullish movement came to fruition, and it was also right that at this first resistance level, it found some resistance. Okay, it doesn't mean it won't keep rising. It could. And you know, you might say, well, which is the right thing to do here? Should I, on this sell position, have my stop loss only above the first resistance, or should I have it above both? And the answer to that question is there's no one right way to do it. It depends on your preference. Okay, some traders are more patient and will go after smaller percent gains. In that case, I would have my stop loss not just above the first resistance, but above the second. So that if it tests the first resistance and breaks through and then drops, I'm still in the trade. Now, the cost for that is I have my stop loss further away, and so I had to take a smaller trade in that example in order to have the same level of risk. So if you're going to have your stop loss further away, but you still only want to risk, in this example, 100, then I'm going to have to take a smaller trade for the benefit of having my stop loss above not just one, but two resistance levels. Okay, that keeps you in the trade longer and gives you more of an opportunity for it to turn the right way eventually. But if you're maybe a little more aggressive and you say, listen, I trust the first support level, I'm going to take a larger trade and have the same level of risk, but have my stop loss only above the first resistance level, that's okay too. And you actually could do both, right? I could take half my trade size with my stop loss above the first resistance, and I could set up a second trade with my stop loss above both resistance levels. If I'm wanting to kind of split the risk, but if I still believe that the USD should drop against the Canadian. And I'm not here to tell you that that's what you need to trade. It's an example of a strategy here based on, number one, the technical analysis, and number two, what we're reading about fundamental headwinds maybe. Now, it might be interesting to look at crude oil then, and let's see what is happening with crude oil. Is crude oil dropping right now? Is it rising? How may that affect our USD Canadian move that we simulated here as a sell? Let's expand the chart on crude oil. Back away a little bit. You can see some of my old lines that I drew from a while back. And you see it's ranging right between the resistance level up here that we drew in the past and the support level that we drew. Look at this ranging. This, if you don't know what ranging means, this is a good example of ranging. This was a resistance level here. Resistance, resistance. Once it broke above, that became support, as you would expect. Old resistance, once broken, tends to become support. And then you see, once it found resistance in this area up here, it ranged between this support and this resistance, okay? Give or take a little, right? It went up to the resistance, broke it by a little, but back down. Came back near the support, went back up. Back to the resistance, back down. Back near the support, back up. Back near the resistance, back down. And now it's back near the support again. Okay, now we could widen this a little bit. Let me drag the support down a little. Let me drag the resistance up a little. but look how close those lines were from old lines that were drawn in the past. There's our support and resistance. Here's our little alleyway that the movement is ranging between this high and this low. So right now we're just above the support. If oil is going to bounce off this support level, shouldn't that help the Canadian strengthen and pull the USD down? So it looks like the technical analysis is on our side, that if this support level holds on crude oil, then that bodes well for the USD Canadian sell, right? And so this actually looks like a nice spot if you wanted to buy on crude oil, get your stop loss just below this support level. Your potential loss will be a lot less than your potential profit if this ranges back up near this resistance like it did the last several times. Okay, so very nice technical analysis on this to say, hey, maybe I want to buy on crude oil. I can program my take profit and stop loss simply by saying, if I get below this support level, I'm at 78 even would get me below this support level. Okay, I could go 77.90 or something like that to get just below 78. So if my stop loss is 77.90, whoops, I need my decimal point to work. Let me get out of there a second. That'll be easier. There it is, 77.90. And my take profit then, if I'm looking here, we're up around 84 before we hit resistance, 84, 85. So I'll even short that and get out before the resistance. And let's say 83.5, 83 would be fair. It's well before the resistance up there. So I can say take profit 83, let's say. And that's getting out well before the resistance we see there. And look at the ratio, 155.50 potential profit, 99.50 risk. And if I want to get a little closer to the resistance, remember the resistance is at 85 almost. So if I go 83.5 even, that's still getting out well before the resistance. So if I say 83.5, that's getting near almost double the potential profit. And maybe I cheat that up a little closer to 84. Now I'm at almost double the potential profit compared to risk, a little less, and I'm getting out over $1 before that resistance level that we see here at about 85 is the resistance, and I'm getting out at 83.75. So if you like the way that sets up potential profit, potential loss, there's my $100 risk approximately that I was postulating is maybe what my target potential loss is in terms of risk. And that depends on your tolerance for risk, what you want this number to be, and also what your balance is, right? What percent loss do you want to risk on each move? But you can easily work that out, and it converts it. These numbers are in my account currency. So if I had pounds, if I had yen, if I had euro, doesn't matter. It'll tell you in your account currency what the risk is, even though the margin currency might be something different for the instrument. So it simplifies everything for you. And if I like the setup, then I go ahead and I buy. Okay, very easy to do. Looking at the technical analysis, everything can be done right here on the platform. Look at your signals. The fundamental news is there for stocks. I haven't showed you that, but and by the way, we used Market Buzz. You click on Trading Central, you go to Market Buzz. It brings up links for articles for all of the stocks that are trending. And in the last session, we looked at the top trending stocks, which were Tesla and Amazon. And take a look at those trades from the last webinar. Amazon's up 200 plus. Tesla's up $22. That was straight from the articles we saw. We did a bit of technical analysis. We looked at headlines also. And that was a fundamental analysis webinar. Is why we looked at the mostly the fundamentals first, and then we looked at the technicals, and we liked the entry point. But when we used some of the articles through Market Buzz, and also looked at the headlines like we did on some of the major websites, we decided that this was the move that made sense. And maybe I close those off now. Let me go here, modify. Wait a minute. No, I don't want to modify. Let me click on close position. Okay, there I take my profit. Okay, maybe I decide, you know what, Tesla I'll let run a little longer. Take the profit on the one I liked. Maybe Tesla I think is just starting to move. Depends on what you want to do. This, I'll just close these to kind of get them out of the way for the next webinar. And now we've got our US Canadian position and our crude oil. We just opened those, so they're still down a little bit from the spread. You want to let those run a bit, to get past the spread and give it time to hopefully move into profit. Maybe by the next webinar on Thursday, we'll take a look at those and see what's happening or what happened on those. And here's a move on GBP USD that we placed also. So any questions on anything we've covered, on any of the tools on the app or the platform in terms of carrying out your technical analysis and your fundamental analysis? Okay, question about natural gas. Let's take a look at the technical analysis on it. Okay, there's natural gas. By the way, you can trade on some of the natural gas future contracts or on the spot price. You have to pick the right one for what you prefer. And so if we expand natural gas and take a look at the technicals, and real quick, we can talk about the fundamentals. How does natural gas do if the economy is opening up and growing like we saw? Retail sales are going through the roof. So as the economy starts to roar, which it seems like it is, as inflation is kicking in, what happens when the economy is growing, COVID's ending, economies are opening up, there's more demand for products and energy? What happens to natural gas prices typically? Yeah, natural gas tends to go up if there's increased demand for energy in the economy in general. If the economy is doing better, crude oil tends to go up, natural gas tends to go up. We are heading into winter months as well in many places around the world. So I realize it depends which hemisphere you're on, obviously. But the demand has been rising as economies have opened, and that's why crude oil was getting up near 85 a barrel, etc. Natural gas also has reason potentially to rise in terms of fundamentals. And then we need to look at the technicals and see, well, what's happening if we look at bigger candles, like one-day candles. And we see a support level down here on the one-day candles. Okay, support, it came up, came back down, hit the support, back up, came back down, hit the support, and back up for the last 3 days. So if you're looking at a bigger picture move on natural gas and you anticipate increased demand coming, economies are doing well, etc., then you could look at this as a longer term move on the one-day candles and say, okay, the distance, if I get my stop loss below the support level here, the distance to my stop loss with the technical analysis is less than my potential profit to the resistance level up here. If you're looking at the upper resistance being in this area, resistance down, resistance down, resistance down, and the support being here, support, support, support. We've been ranging between this price and this price. So support, resistance, support, resistance, support, bouncing, resistance again is up here. So the technical analysis lines up that you have a little better potential profit than risk if you're using the one-day candle support and resistance. And so it's not a bad setup technically. And then you have to decide what you think about the fundamentals for natural gas. Okay, like I said, in general, when economies are doing well, and if there are supply chain problems, that tends to drive the price up on commodities. If there's, faster growing demand than there is increase in supply, that tends to drive price up. So this is a confirmation of this support level holding this bounce for the last 3 days. Now, you might say, I'd rather buy from closer to the support level. In that case, you put a pending order down here in case it comes back towards the support more. Obviously, you'd have been better off buying a couple days ago on natural gas, right? When it was closer to this support level. That was a great entry point back here. Okay, doesn't mean it's not an okay entry point now. Okay. All right, I think we're about out of time. We've been going for about 50 minutes. Thank you all for joining. Good luck with your trading. I think you'll see a lot of nice movements here through the evening. And especially have your eye on these cryptocurrencies that fell off so much. You could see some rebounds potentially if the dropping has kind of subsided. Take a look at the chart, see what you think. All right, everybody, bye for now. Thank you for joining.